The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here on this 28th day of July. And although I'm basically taking a vacation, I thought it was so important with the markets gyrating like this that it was important to be here. And just at least for those of you who are still working with the Chapman way of learning the methodology, I wanted just to go through some of the techniques that we use. It was very important at this time, and one of the reasons is the steepness, the sharpness, the decline that we've just had is probably symptomatic of an internal structure that's starting to deteriorate. Wanted to go through that, so let's just run through this picture. We've got the Dow at this particular up, and I'm going to go through step by step. We've got the E-minis up 7.75 at 2072. What's important about this is, I always talk about this single leg A up phenomenon. What the heck does that mean? I learned about this a long time ago when I used to observe that in the futures market at 8:30 in the morning Eastern time, when news came out, it was often enough that you could get a severe spike to the upside at 8:30, and by 8:36, 8:37, it was all over. And not only did it decline, but that single leg A in the Chapman wave, the first leg from an identifiable low bar to a peak, and in this case, a single leg. It could actually even be two legs if there's just a nominal peak A with maybe a very slight pullback to make the peak, and then immediately B starts and it goes higher, and then you get this arch formation. Now, we don't know if this is going to be a failure pattern, but the failure pattern says that you go from a low bar and you power higher, and in that high move, it is so powerful that 5, maybe 6 bars consecutively go higher. And then all of a sudden, the MACD and stochastic, which were looking really good, reverse. And within 5 or 6 bars, the stochastic goes from over 80% to below 80%. That's a failure pattern. But you need to see the price deteriorate more than I'd say more than 66%, somewhere around 80%, and then it's almost certainly you're going to have a peak A minus or a B minus, and you'll either have to start a brand new buy signal to buy mode from that level with higher peaks underneath that previous high. In this case, it would be 21, 26, 25. Or what happens, you make a little mini H pattern, lowercase h pattern, kaplop, it goes below the left side low bar, and it starts to tumble. In this case, 20.56 was the low of yesterday, 20.5650. So up 7.25 in the E-minis. It was higher earlier on. It had run up all the way to 2078. I'd say 2077 to 2082 is probably the area of strong resistance. Could even go a little higher if other things come into effect. We'll talk about that in a moment. So the support that we're looking at here is a close under 2056 in the E-minis would target the 200-period moving average of 2050. Okay, let's just go on. The Dow, and one of the reasons why we've been short the Dow and increasing our short positions in certain sectors is that failure, that peak A and then a very quick B and then failure at 18,137 with the stochastic and that on-balance volume and the MACD all turning around suggested a break under the 9-period exponential moving average. At that time, it was in the 1790 17,980 area, would suggest that we're going to go very sharply down to test the 200-period moving average of 17,680. It was a little higher when I talked about that before. And now what we're doing is we're underneath it and we're having a retracement. The Dow's up 94 at 17,536. The stochastic did go under 20%. You remember last week I was talking about it with a good chance that it would go under 20% into the teens, and we've done that. And now there's a little rebound. Call it a little rebound. You can see that the arch formation in the 120-minute chart went to peak F, then a rogue wave, right arm extension to G at that 18,137 level. Kaplop, it comes down and makes what on the downside? 6 troughs to trough F. And now we've got a trough F with a rally going on, and we've hit the 9-period exponential moving average. That should be resistance just about, well, we saw it earlier on, pull back, and now we're up 90 points. This is a counter trend rally. You'll find some stocks, which is going to bring me to something very important in a moment. But in the meantime, look at the weekly chart. If the week was closed at yesterday's 4 o'clock time frame, that would have been a weekly sell mode. I can't call it a sell mode yet. I'm almost sure that it really isn't a sell mode, but you've finally got your sell signal in the weekly chart of the Dow. You've broken underneath that 9-period. You've broken underneath that inside track support level, but the week is here and could easily bounce back in. And the monthly chart is suggesting strongly that this is going to be a pretty serious time and price involved to the downside. Okay, let's go on. We've got, so that's the Dow up 93. S&P has to be following at this particular point. There it is. S&P is up 12 at 1271, broken out to a new leg A. So that's an A minus right there. That's the top that we always talk about. Hit the 200-period moving, hit the 200-period simple moving average exactly at 2064 and rebounded today. So there should be a very nice rebound. Look at the 120-minute chart. That peak G comes down to a trough E. And now it's above the 9-period moving average, which suggests that I would not be surprised if you get a 1 to 2 day, maybe even a 2.5 day into maybe Friday, Thursday afternoon, Friday, counter trend bounce. We've already had that failure early this morning, that big disappointment, which must have scared the bajillies out of everyone. But we are expecting it, and we've covered the possibility of a rebound in my Traders Corner. Let's go on to the QQQ series. Look at the QQQ series, up only 17 cents at 110.34. Got repelled in that inside track resistance area right there. That peak, I'm going to call it an E for now. Peak D in the weekly chart probably this week, and leg D still in the monthly chart. Hit the 200-period moving average to the penny, 129.77, and it's trading now at 110.36 in the 120-minute chart. That's what I was trying to say. This is not yet leg A because you need another bar to the right before you can get a leg A. In the meantime, it's a very nice bounce on the 120-minute chart, but a pathetic one in the NASDAQ, which takes me to a very important sector, the IBB. One of the reasons why I want to point to the IBB now, it's up 377.54. We've been short since almost the top, and it's going to be very interesting. I'm remaining in that position with the in the Traders Corner, and we've also got the counter trend, the short ETF that we are holding. I don't think this is going to do much. And of course, Gilead Sciences is coming out this afternoon. We actually have this as a short. We had it as a short at 117.41. I'd recommended this morning to take a little bit off. Why? Because earnings come out today. If the earnings are a spiral to the upside, well, we'll be taken out in the afternoon session after the bell, if that's when it comes out, at least for a gain, no matter how much, even if it, well, it can't gap because it would have to actually move to that price. But most importantly, it looks to me, based on the monthly chart, that Gilead Sciences is a great company, but it looks to me like this is a right shoulder failure pattern, a right arm extension pattern in the monthly chart, and that the moment it takes, it's already hit 108 something. Is it 108 or 17? 108 exactly, round number. Oh my. Now I should start to get a little nervous, right? Round number low. I wouldn't be surprised if it spikes on some news. I mean, it's a great company, but it also would not just surprise me at all if at some point in the next 3 to 5 sessions it takes out the low of today and starts heading down and makes a rectangle pattern going into the low 90s over the month of August. That's the way I'm looking at it. We'll see if I'm right or wrong. Now let's go to something else. I wanted to go to gold. Gold should be having a little bit of a bounce attempt here. Down $1.90 at 10.94. This is not very good action. Now, I know a lot of people are going to be looking at gold and saying this is the time that, well, if they haven't been saying it already, they'll be saying it now. This is the time that gold should be bouncing. To tell you the truth, I see no reason why gold should bounce. The dollar's still holding okay. It's not looking great, but it would not surprise me. Yeah, you could have a little bounce. No, there's no question you could have a bounce. I'm talking about a pretty serious rally there because I've read gold. What about gold? A whole bunch of things. I don't see it yet. And I'm still waiting to see the people here in the Boston area. I want to see signs on the former stores that said gold sold here, and then I want to see to rent. At that point, I will be really interested in gold as a longer intermediate term position. But at this point, yeah, bounce, sure, it could bounce. I don't think it's a major turn. Look at the dollar. The dollar is relentless. Look, yesterday, ugly candle. Thought, okay, A to B equals C to D down. But wait a minute, inside bar today, acting quite well. So I'm looking at the dollar and I'm saying currency of safety, like bonds have been, a currency of expedience because the other currencies are not that good. A lot of things, and it's just helping the dollar. I don't see it being at this point overly strong, but I don't see it being overly weak either. So it's just a kind of currency of convenience. All right, let's go to bonds. US, here we go. Look at this. Bonds have had a fabulous move. Leg seen the daily probably peak. C today, 120-minute chart made a peak. D bonds could pull back a little bit, but they really do look quite good. The monthly chart has held that support level quite well, just broken above the inside track resistance. This should be good. I like the way the bonds are acting here. And once again, currency of safety in this case, or an instrument of safety. Let's go to high-grade copper. High-grade copper is having a nice rally today, but the monthly chart is still looking really poor. So is the weekly chart, and you're on really key support level of 2.39. If 2.39, yeah, 2.39. If copper closes under 234 in the next 2 weeks, I would say that is serious stuff, and it's economically serious. It's a harbinger of things that have been and maybe to come. We'll see. Let's go to EUR-USD and the euro currency pair. Yeah, nice move, peak A, B, maybe a C today. A little bit of a bounce, but it's not looking great. But I will tell you something, that if the euro at 1.104 is able to rally into the 1.123 area in the next week, that'll be very important. All right, we've got a break coming up. Basil Chapman, Tiger Technicians Hour for the July 27th, and the Dow is up about, I think I got you, can't see right now, about 90 points.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and let's see. We're looking at the Dow still high. We're starting to see some of the other indices moving higher. Let me do this. Oh, I want to go to, I believe, is it Rich in Orlando?
How you doing, Basil?
Yes. How are you doing?
Very good, very good. It's a beautiful day in Orlando.
Well,
nice
I'm also looking at not such a beautiful day, a little cloudy, but I'm looking at the ocean waves, and they look pretty nice, and hope to get out there very soon.
Well, an ocean view is always nice. That's for sure.
I got a beautiful view, yes. And what you'd like to look at?
Well, last week I called and we spoke about VNR, and then you had mentioned about giving a call later in the week, Thursday or Friday. I just wasn't available, so I wanted to give a call today. The VNR is basically like an oil trust. It's a distribution, oil and energy distribution company, but it's a trust company.
What dividend do they give?
Well, the dividend is it's almost 18%, but that's because the price is down.
I remember speaking to someone, I can't remember where. I met them somewhere, and I don't even know how it got into it. And they said, oh, yeah, we got dividends. It's a great dividend stock. And he spoke about VNR, and then he mentioned the dividend, and I thought, whoa, that is amazing.
Yeah, the dividend
I don't know how they can afford to keep doing that.
Well, that's really, the irony of the matter is it's been doing this for the last 15 years that I'm aware of. I had listed it around this price about 10 years ago. And so now my interest is that, well, wait a minute, now's an opportunity possibly to go back, to go into it. But I just don't know. I mean, it's been paying all this time. And it looks, from what I can see, it looks like it's a substantial company. It's not like a fly-by-night type of operation.
See, that if you do the homework on that, then I feel a little bit more comfortable. You know, there's a company called, and I always talk about this, Nordic American Tankers, Nordic American, Tankers. And I remember hearing this guy who owns the company, and he says, we've been paying a dividend every quarter for the last 500 years. I don't know what it is. It's just an amazing figure. It just really, I'm talking about 40 years or something like that. It's unbelievable. And the stock went from, I can show you right here. It went from, let me move this away. I'm not doing this very well. Yeah, it went from up in the 30s at one point down to $6.87, and yet he kept paying the dividend, and now it's run up beautifully. It's I'm so sorry I missed it. We actually had it in my opening call as a trade at one point, but we just got out real quickly because I didn't want to take any chances, and yet it continued higher and it went to the 17s, and he's still paying the dividend. So now I don't know if this is that kind of a company, but I'm going to do this in VR.
And my interest would be is a long-term buy it and just let it sit there and let it pay the dividend. But, I mean, it is exactly that. You sit there wondering, gee whiz, how long can this go on?
You see, here's the issue. Here's the issue. At 18%, you've got yourself about 1.5 points of a cushion in the price. So if it pulls back 1.5 points and then it starts to meander and kind of comes back, it doesn't matter. You've got yourself an 18% cushion. However, if they cut the dividend, if they're still paying the dividend, but they cut it, then all of a sudden your risk is a lot higher. Now let's just talk chart patterns. If I can just talk chart patterns, you know why? The only reason is if you do buy it and it drops to 9, and then they cut the dividend, you're just sitting there and saying, oh, that is a waste of my money. It's just going to sit there. I'm not going to do anything until it comes back, et cetera, et cetera. That's my only concern. Now, you've got experience because you've done this before, but I'm going to make 2 suggestions. The first one is, on a chart pattern, it looks like it's trying to run from $11.16. It's up 34 cents today. VNR is the symbol. And it looks like it could make a rectangle formation or an arch formation going to a lowercase m formation, and it could trade between 11.53 maximum at this point. I would say is that ugly candle of the 20th where it opened at 11.72 and opened at 11.70 and then went to 11.72 and then plunged. So that's not bad because that's it's about 5% on the upside. You see, I like to look at the dividend stocks as capital gain and dividend play. Then I'm looking at a good quality chart pattern. I'm looking at the benefit of also getting, years ago, I used to play preferred stocks like this. So I'm going to make the suggestion. Number one is that if you want to go in, I know it's going to be the tiniest little dividend if you do it, but just to nibble on it, a small position. Now, you know what? We've got the break coming. Let me get my thoughts exactly clear so I can give you great specificity rather than just ambling along here. So can you hold on?
Thank you. Sure, sure.
Orlando, we'll be right back, folks. Basil Chapman, Tiger. Down, up.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I've always thinking, talking about Think or Swim, and that commercial reminds me right after the show. Got a fabulous options show coming up, so stay tuned. And we're on right now with Rich, and we're looking at VNR trading at 11.11. It's up 29 cents. So my thinking is this. The pattern I'm looking at suggests that it can go sideways if today or tomorrow, without breaking today's low, it's able to pierce 11.55. That'll be very good action and suggests that the 10.44 low that we've just seen should remain the low at least for a week or two. That's going to be the big test. I've already drawn in the 120-minute chart an arch formation, and I could do the same thing here in the Dow chart going just above 1138. So this is going to be very important how it comes out of it. So here's my recommendation. If you're interested in the stock, I would still be the monthly chart looks terrible. I don't have to tell you that. The weekly chart looks lousy, but it does look like it's trying to probe for a bottom. So I'm going to suggest that you still have a little position here, but you treat it not as a dividend stock initially. You just treat it as a stock that has to prove itself if it's able. Today's Tuesday. By this coming Monday or Tuesday, a week from today, let's say, if it is not taking out 1044, but instead it's making slightly higher highs and preferably higher lows, that could say, oh, okay, I'm ready for a 5 to 6 week counter trend rally. My thinking is it's still going to go to a lower low. And that's my biggest reason for saying if you can get in from one dividend play, I don't even know if it'll last 3 months. I don't know when the next dividend payment is going to be. But I'm hesitant to say that I like it as a stock for a dividend over a period of time, because there's a chance very quickly that it could take away the 20% dividend, and that would be taking it down to the 940 level. And boy, if it does that, I think it's going to have a real tough time coming back. So as a trade that has the potential, if I'm wrong, to move higher, making higher lows and higher highs, and going into the 1180 and then the 1220 area, that's the way I would just nibble at it right now. Give it a couple of days. If you think it's strengthening, you could add a little bit more, but I would have a fairly tight stop. Don't get stuck with this thing under 1044. And as a dividend play, I'm going to suggest that I don't see it as a dividend play right now, because there's still a risk of a 12 to 15% correction. It could be more. Does the picture, do you understand the picture I'm looking at, right?
No. I see what you're saying entirely. So, all right, listen, I very much appreciate your input. Thank you so very much.
I always appreciate your call, and in a week, let's look at it again, okay?
All righty, we'll do. Take care, Basil.
Thank you. We've got Rich there, and let's go to Mike in Ormond Beach. Mike, how are you?
Great, Basil. Yesterday I took a little more than half of my DXD position off.
Excellent.
And thanks for the guidance on that. I really appreciate that.
My pleasure.
Anyway, I was able to watch the markets all day, and I saw how we were closing, and it looked like they were closing pretty weak. And I know a couple of the people said 17,465 was an area of support, and we didn't close over that. So I figured I've got a little less than half of that DXD position I still left on. I figured we'd get a bounce today and maybe pop a little lower.
Yeah, okay. So how about this? The DXD, folks, is the 200% short the Dow. It trades, the dog is the one that trades the very best in proportion to whether the Dow is going up or going down. The DXD is good, but sometimes you say to yourself, oh, it should have, and then you say it should have been better, it should have been worse. Mm-hmm. But it's very close. It's the closest you've got in trading a non-futures product as a stock product. So I'm going to suggest two things. Let me look at the DXD right now. So you've taken profits. It's now down about, say, 80 cents or so from where you got out yesterday, maybe a little more. You know, it depends on your time frame. My thinking is that the damage that's been done is very severe, that there are a lot of cyclical stocks. Did I see that DuPont? Yeah, DuPont, no, it couldn't even do anything. It's bouncing back. It's now down 53 cents. GE, let me just do this. My Dow Quartet, GE, is up 8 cents, had a very nice candle yesterday, which is another reason why I thought that I said to subscribers, there should be a pop besides my Chapman Wave Trend Gauge, which gave a very high reading. But most importantly, what I see is that that GE is still acting very weak in the weekly chart. IBM, let me have a look at IBM. It should be bouncing. Oh, great. It's up 35 cents. Looks terrible. Triple M. Nice action, nice candle today, but the weekly chart looks, it doesn't look good. And the monthly chart is not looking good. And UTX, so let me just do this once again. My overview is that the Dow is going lower. That I've said for some time now, 2 closes out of 3 or maybe 4 underneath 17,500 would be a big negative. Well, yesterday we got a close under 17,400. So as I'm looking at this, there's more and more evidence to suggest that this is going to be price and time on the way down. That's number one. And secondly, my target for the Dow is the left side. Let me show this here. It's the left side low bar. Let me just move this up right here. It's this left side low bar of 17,034 made on the 2nd of February. And we're arching over, and this says that sometime in early August, maybe first week, maybe second week, we should be in that area. Now, I don't know if you want to, if you want to get out and then try to come back again. That was one of the suggestions that I made this morning, that for some of the positions, you could maybe take some swing traders could be taking some profits here. I wanted to keep most of our positions, and that's kind of the way I'm looking at it. Now, I could be wrong. I did that last October in the IBB, and then there was a fabulous gain, and then we saw that entire gain just about get taken away, and we got a small profit sitting in a beautiful time move on the way down, and never got out on the way up because I thought it was going to be a more serious decline in the IBB. And this is a very key component of all the sectors that I'm looking at. It's going to impact the the QQQ series, the broader composite index, New York Stock Exchange, etc. So I don't want to say to you, normally I would just be very adamant and say, stay with the DXD. But all I'm going to say to you is, you've taken off, and that's a really good thing. If you wanted, right now, I can see maybe 80, even 120 points further on the upside is possible. And what if Gilead gives a good earnings report today? That's going to spike the IBB, which will try to help the QQQ. So in risk reward, unless you have the same outlook as I have, the determination that I have that says we're going to go to lower lows and lower highs in the Dow, then maybe you want to take a quarter of the remaining position or half of the remaining position off, and you can always add it back in increments from, see, we're up 100. Maybe at the very opening even the opening wouldn't have been great. I think you did a perfect thing yesterday. You took off half. All I'm going to suggest is you don't have to do it right now, but if you want to take off a little bit more and then dedicate that, if you're talking about the DXD, then I'll give you a number, and that says, oops, let me just get it right here.
Okay.
The DXD.
Yeah, I was thinking of what I took off yesterday, gradually add back in with this bounce. And get the DXD at a better price.
Okay, so now that was going to be my part C of this whole thing. The first one was to say, okay, get out, take your profits as well. Here, it's not quite as much as it was yesterday. It's still really nice profits, and then you can always get back in. That was number one. Number two is to take a half of the remaining position, and that you'd put back. You came up with the third idea that I had, and I like that idea, which is to say, you know what? I've got my profits. I'm not going to rush into putting the money back in on the short side, but I'm going to, rather than take any more off, I'm going to keep what I've got, and I'll add back. And the increments I'd be looking at it's at 21.26. I would say 20.90 is the 9-period exponential moving average in the DXD. It's called the ultra short Dow Pro shares. So what I'm looking at here is the 9-period moving average on the daily is at 20.90. So I'd go in between there. I'd say it's at 21.26. If it tests 21 and then slips underneath, that could be just a little bit goes back in. But at the same time, I'm not sure yet, because this correction was really severe, and it was a single leg down. A single leg down has two characteristics. One is it has a very brief pop to the upside, and then it makes an A to B equals C to D type action to the downside. So you don't want to be out if the market starts to go down again and say, oh, geez, I shouldn't have touched it. Right. So that's why I'm saying by the end of the day or by tomorrow morning, if there's another pop-up, maybe the IBB pops up because of Gilead, who knows, then you can say, you know what, about 10:30, 11:30 tomorrow morning, I might add a little bit back, but I'm going to give it another day or so before you add back the full amount. I wouldn't rush to put the full amount in. Why? No. Because if the Dow at any point, I tell you right now, it's at INDU. If the Dow at any point at 112, it's up 112, up near the high of the day. If it slides it's at 17,552. If it starts to trade at 17,400, 17,480 to 17,470, in that little range there. That's where I think a chunk of the move to the upside has been completed.
Okay.
So I hope those are the numbers that can help you.
Yes, it does. Great.
And so congratulations on a really nice move and having the gumption to get out yesterday on almost the low of the day. The other thing that I would say to you is just keep the bigger picture in mind. For me, the bigger picture now is that the monthly is starting to deteriorate. First time we're under the 9-period moving average in 5-6 months. The weekly chart is starting to deteriorate technically. Both of them are deteriorating technically, and I would not want you to get completely out of your DXD. So I would just be looking to add increase. In fact, you could even say the Dow is up 115. If it goes up 175, I will add X amount. If it goes up 225 altogether from yesterday's close into tomorrow, maybe you can add just a little bit more, but keep some powder dry. You don't have to go all back in again. You've got a very nice profit. You've got a little bit of a cushion. So congratulations. It's a tough trade to make, because if I'm wrong and we're just going to have the same trading within the trading range, yeah, we went a little bit lower, but all it says is we don't have to go as high, but we're back in the trading range for another 3, 4, 5 weeks. That's going to be very frustrating. So
Right,
I'm
and
pleased you took it off. And the other thing is just you don't have to rush to put it back in. But if the market suddenly fails later today, then you want to just a little bit extra. Don't get carried. Don't be fooled by the market. It's had a massive move down. It deserves a breather. It deserves a break. You got to get new shorts in. So the fund managers are waiting for a bounce before they reshort. That's the way I'm looking at it. Oh, the other thing that I must mention right now is the VIX index. The VIX index is at 1429, down $1.31, down 8%. The VIX has support around about 1382 to about 1363-ish. And that's going to be very important. How does it hold there? What happens to the weekly? It went right to the 200-period moving average. It's amazing. And then it got repelled yet again. So that's going to be very important. So as I say, we might be looking at time on this bounce, not so much in points, with maybe the biggest move today and a little bit tomorrow, and then it kind of stalls. But at the same time, I'm looking at the intermediate term. I'm still looking for lower lows.
Thanks so much, Basil.
A pleasure. Always good to speak with you, and congratulations on a very nice trade.
Okay, bye.
And thank you for calling. So, folks, let's do this. I wanted to go through some of the sectors. Look at the RTH, the Market Vectors Retail ETF. It has Walmart, Home Depot, Amazon, CVS, Lowe's, Costco. I mean, it's just Target, the works. Now, this is going to be very interesting. Why? Because it only went to a peak F in the daily 3 days ago. And it's a leg, it's a possible F/C in the monthly. The technicals are just beginning to weaken. Stochastic has weakened to 85%, but that's still very strong. And the weekly chart is the one that had the right arm extension failure mode as I'm reading it now. So this is saying to me that slowly, one by one, we had to have the patience to wait for all these different sectors to get in line to create some kind of a top that has the potential to increase from short term to an intermediate term. We'll talk about that when I get back. Basil Chapman, Tiger Technicians Hour. Dow's up 112. Right back after these important factors.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Basil Chapman. So let's just continue with this with RTH, which is the market factors retail ETF at 77.72, only up 2 pennies. Lousy looking chart, made a peak F in the sixth highest peak in the daily chart at 79.50. That was an all-time high. It went there last week, and looks like this week very well could be a peak E. And the monthly chart now has got an F/B. I'm not going to give it any preference right now because the MACD is still good. Oh, where did that happen? Okay. And what's really important about this is that the 120-minute chart had that rogue wave right arm extension, and it's plunging and pulled back sharply under the 9-period moving average. So this could be the start of the next round of weakness, and that is in the retail sector. Let's just look at Amazon, since Amazon is part of this group. Amazon should be up today. Yep, it's up at $1.62. And we're looking at, why is that there? Okay, so this is not Amazon, it's AZN. AMZN. I guess I missed 2 letters. Big thing that. The Amazon is, in fact, down 281 at 528.60. Had that sharp spike to the upside the other day on the earnings news. Went to 578.99. Why? Oh, it opened at 578.99. Didn't go to round number. I went to 580.57, trading down here almost 60 points. and G/C in the monthly chart, D in the weekly. That's what we wanted to see. D in the weekly. Okay, so this is saying even the very best of the best is having a little difficulty. It made a lower low from the gap, and that's important. So watching Amazon, if Amazon takes out 520, no, there's 515 in the next week on the downside, instead of breaking to the upside 553. This is going to be very negative. Let's go to the next one. Let's go to Target. Target has always done very well. Target has failed since it made that peak G high and a peak D in the monthly. So Target has 79.92. Yeah, these are not good-looking charts on the short term. In short to intermediate term, monthly is still very good. And let's look at Home Depot. Home Depot is holding in the upper part of its range. Yeah, it's looking okay. It's not looking great, just okay at 113.89. Made a peak D double top in the daily, but a peak F way back at 117.99. That was back in March of this year. So, yeah, we're looking at these. Now, before we run out of time, don't forget a great option show coming up. Let's run this again. The VIX index. The VIX index is now at 1430, down $1.30. If the volatility index remains by Wednesday afternoon, Thursday, way down in the under 14 area, in the 1382 area, I was going to say this bounce, and this is what I was trying to impart just a moment ago to Mike, the bounce could last a little bit longer. So how Gilead, let's just go to Gilead trading at 111 now, 111 up $1. If Gilead is able to get whatever the news is, if it spirals up above 115, maybe it goes even to 118. We short from 117.41. If it goes anywhere close to that and then holds for 2 days instead of just breaking down, that's going to be very important. That's putting it into the trading range, and that's going to help the IBB, which already is up 549. At 379. So we're looking at this. We were lucky we were shorting right in that area there. It plummeted down to 369. This is a good counter-trend bounce, holding the 9-period exponential moving average. My suspicion is that this is the sector that's going to tell us a lot about what goes on in the next month, the month of August, because if it starts to meander towards the upside and just doesn't break down, it says, oh, these guys are being rewarded once again. If it starts to take out the lows and the IBB breaks at any point under 361, that's going to say, hey, monthly and weekly charts are being impacted. So those are the things. I wanted to be here just today to go through all those different parameters. Hope that helps. Have a wonderful day and stay tuned for the next show, Options Hour, and have a wonderful day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.